Hello and welcome to this week's podcast. We've got a special guest, John Blackman, and he is out of Austin, Texas, and he is actually in the newest position that we've created. And we have co-sponsors that are involved already where we help them buy their first property and be involved in that. This is a different one. This is a market maker program. And what it is John will be the market maker in Austin, Texas, meaning he will develop the relationships. He will do everything a co-sponsor is doing and more because he already has some experience in real estate. He already knows what he's doing. He has SEC knowledge on how to deal with that. He just wants us as a backstop to help him get into the multifamily industry. So you're going to meet him. We're going to talk about, have a little talk about what he does and what that position entails. And love to hear your feedback on it. So share it, like it, and thank you so much for joining us, and meet John. All right, so we've got somebody new here. We've got a new co-sponsor and actually a new position that we just put into play, and our guinea pig on that is John. And so we're going to introduce him and talk about what he's doing. So John is from Austin, and tell us a little bit about yourself. What have you been doing?
Okay, well that's a pretty big question, but thanks for having me here, Darwin. Let's see. In my recent past, I have been building homes. I also have a real estate brokerage in Austin that I run with my wife and my team down there. They're awesome. I love them to death. And primarily I've been building homes as the development part of my career. Mostly building since about 2008, 10, like when the crisis first started. I'm like, this is the time to get started. And so, yeah, that's pretty much it in a nutshell. Previously, I come from a software background, so I'm kind of a computer nerd at heart, but I fell in love with real estate around 2008.
All right. How many homes have you built?
About 60.
About 60? Now, here's a question from you. From 2010 to 2020, or 2021, what price changes have you seen in construction costs? Just rough idea.
When I started, and I was telling you about this a little bit before, I think we were building for like 75 or 85 a foot, and that was in 2010. But at that time, banks weren't lending, so we were doing all of our deals in cash only. And everyone's like, 75, can 85 a foot? Oh, that's too much. But the trades were just super available. Everyone needed work, and no one was lending, so that meant no one was building. So if you were brave enough to put in all cash on a deal, you could build for about 75, 85 a foot.
Okay, good. And what now?
Now, I'm probably looking at least 225, right? 200, 225. And that's for infill building, so it depends. If you're like a big builder and you're building, row after row of houses and you're buying lumber by the train cart, okay, yeah, you can get that number down. But for infill building in Austin, it's about 225 a foot.
Yeah, and you've been there doing that since 2008 or so in Austin. So you've also seen the extreme growth that Austin has had, especially over the last 5 years with big tech and Fortune 500 companies. What's that been like?
Well, I mean, Austin was doing all of that before I moved there. So when Dell was the big mover back then, when I lived in Seattle, I heard, Austin's growing, and people were complaining about the traffic then. But it's just been unprecedented since then. So, everyone's moving to Austin. You've got Facebook's there, Apple's there, the new Tesla plant, the Amazon facility, and more to come. Oracle's got their headquarters down there in Southeast Austin. It's a beautiful building. So I don't think that we'll see that stopping anytime soon. And so literally it's just San Francisco's kind of slowly moving to Austin. Right?
Yeah, so on the long-term trajectory, Austin is going to be huge.
I think so, yeah. I mean, the other problem with Austin is its zoning is still set up for a little town. And so until they change that, they're going to have the same problem where all the single-family homes around the core are just going to get more and more expensive, which is why they're building these like domain-like structures where it's like almost like a new little city center where they can, say, divert the traffic away from downtown Austin.
And John, while we're talking about construction, those kind of things, the conversation of late has been infrastructure.
Yep.
So when it comes to the growth of the Austin area, how is the infrastructure keeping up with the development?
Okay, well, it's not. And I say that a little tongue-in-cheek, right? Austin is spending a ton of money on trying to fix it. So just for example, when I first put a water tap in for a new home, like in 2010, I'd call the city, say, hey, I need a water tap. Like $2,000 later, they would come out and put a water tap in for me. Today, if I need to do a water tap, I have to pay $2,000 in fees and permits just to get my permission slip, and then I have to go pay another $15,000 to $18,000 for someone else to put the water tap in. So those costs have gone up dramatically because a lot of it's new. Plus all of the money that's going for those tap fees are all going into infrastructure to improve water coming into Austin. Austin has a 2050 water plan where you can go to the Austin Conservation Authority, and they have all these cool little demo trucks that they'll put out at different events, at least before COVID, and you could walk through and try and solve the Austin water problem. So they're still trying to figure that out in terms of do they truck it in, do they build a pipe, do they drill more, do they tap into aquifers? So, and then with the population growth on top, so water is a big constraint. So when you're looking at developing anything, you always got to figure out where's your water and sewer going to come from. So in many cases, it's not land that's the limiting agent, it's where's the water pipe going to be.
Okay, good.
Yeah.
Good information to know. So we're going to be cutting this little snippet out. So John will be the new position is market maker. So because we do not have boots on the ground in Austin, or any other city for that matter, he is our market maker there. So all the deals in Austin will go through him. He's got experience in real estate, he's got experience in raising money, in dealing with investors. He's got all the knowledge that he needs there. He just needs us as a backdrop to go ahead and help him do that. So that way he can be there, help develop the relationships with the brokers. He can help develop go out and see all of the properties. If we have an opportunity in DFW, Julie and I'll just run right out there and take a look. And we've gotten a lot of deals because they say, hey, I've got to sell this one, go look at it. And 10 minutes later, we're there. And that way you can be the boots on the ground there to have those relationships, look at those properties, and all of the different cities and what the needs are. So that market knowledge is valuable for us as well. And so hopefully long term, we'll get you 5, 6, 7, 800 units in Austin as our
we might have
market.
to build them instead of buy them.
Well, you know what? We can also build too.
But I certainly see things through a builder lens just because I've done so much of it, at least on the residential side.
Yeah, well, at $225 on the building and an average unit size of being nearly 1,000 square feet, $225,000 to build there, not including the land.
Or the soft costs.
Yeah, or the soft costs. But I guess if you're buying, lumber by the, what did you say, train car load?
Yeah, by the train load, then you get to, get a little bit better pricing.
A little bit better pricing, because I think in building here, hard and soft costs are about $145,000 door in construction costs, not including land.
Right around there.
Is that for residential or multifamily?
Multifamily.
Okay.
Multifamily, and that's garden style or tuck under. That's not. That's no parking garage or anything like that.
Yeah, well, you get so many opportunities of scale too, just in the way that those buildings are laid out. You get to share a lot of walls, and you can build at scale. You get a lot of benefits from that.
One roof.
Yep.
One roof. Yeah, absolutely. So, but having that knowledge as far as who the contractors are, et cetera. So we're already looking at properties in Austin.
Okay.
We analyzed one today. Julian's been working with the brokers down there, and Julian will be working with you on how to run the numbers and analyze those, and have to go out there and take tours with you a few times to know what you're looking at on what to communicate back with us.
Sure.
Is there any areas that you think that you're going to need help in? Is there, because you learned about us and what we do, and you saw value in there. What value is it that we're bringing to you in that area?
It's a tremendous value, really, because when you learn anything, you're going to stumble along the way, right? And it's just a matter of the cost of those mistakes. So I stumbled my way through figuring out how to do residential building and investing and a lot of other things in life, but the real estate is what we're talking about, right?
Yep.
So I probably paid maybe, I would say about $200,000 in dumb tax, right? From from building and learning how to build and going through bad builders, making mistakes and growing my checklist over time to be like, well, now I've pretty well got it. So if I pay dumb tax, it's much less than before. So those bills are a lot bigger when it comes into multifamily real estate.
Yes, they are.
So hey, I don't want to run into an existential dumb tax if I'm coming into multifamily. Plus, getting the loans for them and being able to finance them, you have to have a track record. Absolutely. So you can't go into the larger deals without having a team of people who have that, and I just simply don't have it. and you do. So that's why I think you guys are a really good fit, and I'm hoping to bring as much value to you as I would get out of it in return. And I like to say that relationships are everything. You hear that a lot in real estate, but really it does matter, because I always say that depositing a check feels kind of good, right? Even with a couple extra zeros, but like doing something for your investors and giving them returns and enabling people around you to have what they want in their life is really, I try to make that the focus of everything. I don't always succeed, but I try. That's what I aim for.
And I'm glad you bring that up, because investors is our lifeblood.
Yep.
Without our investors, and that includes the lender, because many people forget that the investors are made up of individual passive investors as well as the lender, who generally is 70% of the deal.
Yeah.
And so therefore, for us to always focus, paramount is the return of the investor capital, as well as the return on the investor capital, which in my opinion is even more important as the return on is the return of.
Right.
And so therefore we are always focused on what's best for the investor.
Yeah, and when I saw your webinars, and I watched them carefully before coming to you guys, I noticed that in your communication style, which really impressed me, is that you were communicating everything, good, bad, ugly, small problems now instead of later. I mean, I've had investor relations before, I've had projects that didn't do well, and like you've said, investors understand if things go wrong, just don't hide it, right?
Exactly.
Just expose small problems and the plan that you have for addressing them while the problems are small, instead of silence, silence, silence. Big problem, we have no solution for it, right? That's what will get you burned.
Exactly, and not only that, they're investing a lot of money. They've had to earn that money, so they're usually pretty smart as far as their business acumen, and they understand that you're in business, you're going to run across problems. And it's how you address those problems, and especially how you communicate them. So if you know that you have a problem, tell all the partners. That way they can know and be involved in the solution, because they also might have other suggestions.
They often do, or they might have a resource or someone that can really help you figure that out.
Exactly, exactly. And this, I'm surprised Julian didn't pop in there with, this is a people business. This is not a real estate business, it's a people business. And take care of the investors, and that'll keep you golden. As a matter of fact, when we do our analysis, we've got our quick analysis, which you've already seen some of it, and Julian gets you trained up on that real well. But the only thing we look up is the top right-hand corner, which is what the investor returns are. We're not looking at what we're gonna make. We're looking at what the investor is going to make, and if that number is good enough with conservative underwriting, then we say, okay, that's good. We don't even look at what we're going to make. We know that we'll make something on that, but if we keep investors happy, then that's great. So that would be the same. I want to make sure that you're on the same page, which it sounds like you are, and communicating all that to the investors and partners who are providing the capital. Because not only that, you've developed crowdfunding software and dealt with investors already. So what was that process?
Okay, so that was an adventure. The Jobs Act was passed, I think, in 2008 or 10. I can't remember which one, but it opened the door to crowdfunding. And so crowdfunding has been this big thing, and it's still evolving today. There are a lot of different portals out there that have kind of won the portal wars, if you're so to speak, like your Fundrises and your CrowdStreet.coms and that sort of thing. And so at the time, I was working on a software platform of our own to raise money through our investors, and to have a portal where they could come and do that. And the ultimate goal was to be able to bring, institutional quality investments to people who aren't necessarily accredited, so that way, you could invest in a big building down the street that you don't normally have access to. And so a lot of those portals are enabling that with the new exemptions, Reg CF, Title III. I won't get into the legal malaise, but that project, it did not succeed. Now I had a business partner there, and there were some personal issues that caused that to be delayed, and he is picking that back up. So he may bring it to fruition at some point in the future, and I wish him the best of luck with that. But as a result of that, it was out of a desire, hey, how do we organize money and raise money in an effective securities way that's legit and above board and does everything the right way, because it just makes sense to use computer technology to do that. So yeah, I'm familiar with all the legalese around how to make that work.
One thing that makes that really comforting from my side is we have somebody that's going out raising money and communicating to potential investors. And there are things you cannot say, and you have to follow those SEC rules and guidelines, and at least you already know that, so we don't have to go too much in depth on the training of that, but that's an important thing for investor relations or co-sponsors is don't go out there saying something that's going to get us all in trouble.
Yep, and I see it on the internet all the time, right? You see people on Facebook like, hey, I'll guarantee this blah, blah, blah return. It's usually someone who's done a good deal, they've had some success, and now they think like, oh, it's always going to be like this, right? I just keep doing these. It's like, well, you did well now, maybe you will do well again. I hope you do, but if you don't, you got to be careful.
Yeah, you certainly do not ever say guaranteed return.
Yep.
It's interesting you talk about someone having a success story
Yep.
and then using it as a track record. Well,
Yeah.
one or two deals, particularly in the last 5 or 6 years when it was almost impossible to lose money,
Yep.
is not a track record.
Yep.
30 years.
Yeah, that's a track record.
That's a track record. And
Tell me about your failures. And if you don't have any,
Yeah, you
That
called
is
it
true.
you called it a dumb tax.
Yeah.
And I actually call it an education. I call it education expense.
Right, right.
You lose money on something, you definitely learned a lesson.
Yeah,
now
that's right.
don't repeat that. And I've told people I've got $1 million education in mistakes. So that dumb tax or education, I've already made most of those mistakes. And like you were saying, going through those down markets, right now every real estate investor, every sponsor is a hero because it's only gone up since 2010.
Yep.
And do you hardly ever run across any investors or sponsors that have been around prior to that? And so
that is so true. What I when much as what I'm about to say dates me, when I was started in the business in the early 80s, we had tax laws that were just phenomenal. In 1986, there was a restructuring where there was a time you could write off just even the interest on your credit card bills, right? And so that's all been done away with. But as Darwin was talking about, is when you've been through some down markets, I guess it's what it proves you out to be, either an investor, survivor, and someone who's going to persevere through the bad times, or Johnny come lately who's riding the wave of the rising tide lifts all boats, right? And I know Darwin's been through the real down cycles, the last one truly being in 08, 09, 10. We thought in COVID 2020 was going to be, but really it was just a tapping of the brakes.
Yeah.
And it was paused for maybe about a quarter.
Everything. It changed the landscape
Right,
too.
but it didn't do anything to the cap rates. Interest rates continued to stay at the levels they were, which were historic lows. And then once the early shock was gone, it was back to business as usual. And in fact, if anything, what I'm seeing today is that the acceleration of prices is far outstripping anything I have ever seen in my 30 plus years of real estate. And so if that's not inflation, I don't know what is. But inflation for a real estate investor is a good thing.
it is, but I think that's also why there's so much more money flooding in, is because of that inflation. Is, hey, let's go ahead and borrow at 3%, 3.5%, and with inflation at 5 or 6, you're making money on all the borrowed money you have. And so lock in those interest rates. Our philosophy has always been lock in interest rates long term, which, in the last 10 years, interest rates have gone down and down and down. Every time we do a deal, we got great terms, 4.8% interest, and then 4.5, 4.2, 4, and
3.9.
now there's some that are sub 3. And if you can borrow at that level, especially on a larger deal, you're borrowing that huge amount of money and you're paying back with dollars worth a lot less, plus the appreciation on the real estate. This is going to be a boom time. I heard somebody comparing this administration to Jimmy Carter, and those of us who
I've heard that one, but too,
well, I can't say those of us who remember Jimmy Carter, because I was too young to really remember him. But I remember I remember as a little kid waiting in gas lines, and I remember the inflation that happened, and my dad talking to me about that as that was happening. So I think we're in for a huge growth on the real estate side. Get it out of the fiat currency, get it into hard assets. So raising money right now should be a breeze, because get it out of the stock market, get it out of cash, and get it into hard assets. And so now's the time to buy some big deals. And going to Austin, with all the growth in more Fortune 500 companies moving there. They're still employing people as far as bringing employees in.
This is the best part too. Like all of the stuff that's being built, the people aren't there yet, right?
Yeah.
So the Tesla plant, they're building it, but the employees aren't there, right? I mean, like some of the project managers are, but like wait until they have to staff it up. Like same thing with a lot of the other buildings that are coming, right? It's like, well, hey, it's just buildings now, but once they're done, then they have to employ them. They all have somewhere to live.
Yeah, that's a good point. We had the same thing happen in Frisco when they built the what's called the Platinum Corridor up in Frisco when Toyota first moved in, and a few of the other larger employers. And I don't know how many millions of square feet of office space and warehouse space, all business related, was built, and yet the employees weren't there.
Yep.
And then when they finally said, okay, we're open, and they started flooding in, and now if you go to Frisco, it's endless oceans of roofs and commercial property, and so I suspect the same thing's going to happen there. Where do you see the major growth in the Austin area being?
Well, for multifamily, it's gonna, again, you need land and you need water. So with the Tesla plant coming in Southeast Austin, land out there is still cheaper. There's some flooding issues out there, so you got to be careful about where you put your stuff. And then the Kyle and Buda are two sub-communities south of Austin. I think that those areas, and also Pflugerville, are going to be less expensive to build and develop, and they're going to be close to all the new stuff. It's funny, like if you drive down 130 and just look east, you'll see all these brand new roads that go through a forest, right? And there's nothing there. So that's where all of the building is going to happen, in my opinion. It's going to be East Austin, beyond 21 and 23, out near 130, because you've got a straight line to the airport. It's a brand new toll road, right? That's where they're going to put all the infrastructure spend. So it's the same old thing. Just follow where the infrastructure goes, follow where the city's spending the money. So if I had to bet, I would say that East Austin, and when I say that, I don't mean O2 and like the cool clubby, hip spots. I mean further
Outside.
east of that, like on your way to Manor. That's where the Walter E. Long Park is, and then you've also got the, there's a ton of the McKenzie Falls Park is out there, and you're going to have a lot of development. The city is planning to put just a ton of money into that lake, and so everything is going to just get built up right around it. So
now that would be more on the construction side,
Yep.
which we're talking 2 to 3 years out
Yep.
from start to completion. What about for those who are looking to acquire assets now? Assets that are already in existence that would be open to what we like to, and that is to buy, improve both the physical plant and the operations and derive value there. Where do you see that being a good?
Well, I'll have to say I don't know that market. I'll just be totally honest, as well as I should. But just from the general high level that I do know, Austin either has very new multifamily buildings or very old multifamily buildings. So it's not like Dallas-Fort Worth where you have just this massive market. Travis County is still just 1 million people. And so in Austin itself, those deals are very difficult to find. And usually if you do find them, they're incredibly expensive. Yep. Like I looked at something in CoStar the other day, and it was in, a super, centrally located Austin multifamily. It's built in like 1960. It looked like a converted motel. Each room was maybe 1,000 square feet, and the sales price that they're going for was $500,000 per unit, right? Wow. For 1,000 square feet in an old like 1950s, 1960s like L-shaped hotel, right? Yep. It did not look pretty, right? I'm thinking like,
even by DFW standards, that's pretty high.
I would not spend $500,000 on 1,000 square feet. Now, you can sell 1,000 square feet in a single family configuration like a B80U that's brand new construction for $500,000 or $600,000, but not in like it's basically a converted 1950s hotel room, right? Yeah, it's just like, man, I don't see in what world that would make sense. Right.
Well,
but I keep saying that, and then like you look behind 2 years later, and then they're selling it for $600,000 a door.
Yeah, well, we've seen that.
Yeah.
We every day we say we looked at that property. It was $50,000 a door. Now it's $120 a door. We looked at that one at $10,000. Now it's $80. Yeah. So anybody that bought anything the last 10 years made, or 12 years, made a killing on it.
Yeah, if people have multifamily in Austin, it's worth so much, they're kind of just putting these crazy like make me move prices on them. It's like, look, I'm gonna do so well on this thing if I sell it, because they're holding on to them.
Now, there's nowhere they can go except pay the same price.
Yeah, they do exist, but I think that compared to other markets, the prices are gonna be really high. Right?
Well, like I said, we speak for myself. I'm excited to have you on the team for a couple of reasons. One is the depth of knowledge that you bring to the table, albeit it's not been multifamily centric. You are the kind of individual that is intelligent enough to pick up on the business, as well as have the drive to pick that up. And for me, more importantly, you have the people skills that I find essential to any business to succeed in any business, whether it's in the restaurant business, the retail business, or in the multifamily business. And therefore, I'm excited because I know you will do well for us and for yourself in the process, but more importantly for our investors.
Well, thank you. My head's getting a little larger now.
Well, it's going to be a challenge because the yields there are going to be extremely low.
Yep.
And we would be banking on a lot of growth in the future. And I think a lot of the buyers now are looking at the inflation rate, et cetera, and they're being more aggressive and accepting a lot lower yields. So our investors need to get used to, hey, everything's being squeezed. We got to lower that bar on what our returns are, but we still have to cash flow. It still has to be a good deal.
We do, and properties have to carry their own way. But to Darwin's point, you do have to adjust, you meaning the investor community has to adjust as expected returns, because just as much as I would like to pull up to the pump and fill up at $1.50 a gallon, where instead of $2.75 to $3 a gallon, or a gallon of milk, which I think runs for about $5. I don't know. I don't buy milk, but the point is that inflation has reached a point where we would all like to look back and say, "Ooh, yeah, I'd like to have those prices." Well, the same thing. Inflation has kicked in. The only thing that hasn't gone up is interest rates or cap rates, but returns have been driven lower as a result, and so the investor community has to accept that. What alternative do we have as investors to get the kind of returns we were used to 5 years ago, 6 or even 3 years ago? We're just not able to find those that much anymore, if at all.
Yeah. Well, I mean, it seems like a lot of people are repositioning, but and again, I think there's a certain lens, but it makes me think why I like building, because hey, we just need more supply, right? And that's another problem with Austin, is that they only kick out about 10,000 permits a year. And they just need more than that. Now, the city has recently increased their space. They bought a new building. They're hiring more people to do permit development and that sort of thing. So I want to look closely at that, but I think that's going to be the key to allowing more inventory to come in. It's just more development.
So it's a good possibility that if we're going to build, then it'd probably be in Austin, because the prices are out of whack. It's cheaper to build than buy in a lot of cases.
Yeah. And then plus you'd have the thing sold before you were done.
Well, we would want to keep it.
Yeah.
So we're long-term holders is what we like. You know, you can get rich buying and selling real estate. You get wealthy buying and owning. So we want to own it long-term. And so build to own rather than a merchant builder who's just in and out would be a great plan of action. And I think Austin's going to be a great market for us. And having boots on the ground there is critically important. So love to have you on board.
All right,
So
I'll get out there with my Smooth and my iPhone and my GoPro.
there you go. There you go. So I want to do this is John is set up with us now, and his email address is john@darwingerman.com. So reach out and say hello to him. And he's developing his own investor list along with ours to go ahead and see what we can go ahead and buy in Austin. Again, I would imagine yields are going to be a little bit lower. But if you're interested in Austin, reach out to john@darwingerman.com, and say hello. Welcome him to our little community here, and give him any tips or advice on what we do, or how you can help, or how you can be involved. And I think he'd like to have that input. And also, he's got a team with Keller Williams on the brokerage side. So if you're looking at buying and selling any homes in Austin, then he can help you out on that as well. But he is focusing all of his energy now to switch over and only be doing this position. And like us, he's got a team behind him that can handle all of that extra work, allowing him to focus on multifamily. So any final words?
No, other than if you are watching this program and you have heard John talk and you like what you've heard, as Darwin said, reach out to John at darwingerman.com and either provide some questions questions for him or some support, I'm sure that if you want to learn more about what he can ultimately do for us and you as an investor, he'd be happy to engage in conversation with you.
Yeah, I love questions. That's how I learn is, I don't know everything. So when someone asks me a question, I get to go do some research and learn something new too. So specific questions are fantastic. Bring them on.
All right, wonderful. Well, we love having you on board. We're looking forward to buying in Austin.
Likewise.
And we're already looking for some opportunities. We have an offer that might go in on a property here this week. So you can drive through that and meet the broker and work with Julian on that part of it. So we're already off to a start there, and this is going to be a fun adventure.
I think it will be too. I'm excited.
Me too. Wonderful. Well, thank you so much.
Yeah, you're very welcome. Thank you.